Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grubner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Happy Friday, Megan.
Happy Friday. Happy Cattle on Feed Day. It's going to be a real short one for us today. We're going to talk cattle on feed numbers. We'll probably talk a little hay, a little ag weather. But to kick things off, let's recap what happened this week in the markets.
Yeah, so this week in the cattle side, fed cattle were $2.40 higher this week. We were $3 to $8 higher on feeder cattle auction markets this week, so stronger on both fronts. The October live cattle futures contract closed up 65 cents this week, and the September feeder cattle futures contract was up $1.80. We also saw a little strength in the choice box beef price. It was up 50 cents this week, really led by what was some stronger ribs this week on the beef side. Cash barrel and gilt prices lost $3.15 this week, and the October lean hog futures contract was down $6.90. Pork cutout value was also lower this week, down a little more than $3. Bellies really led the way, but ribs and butts were also lower this week on those components.
Definitely interesting seeing the cash hog market. We've been so kind of on this steadily climbing trajectory recently and have taken a step back. Is this more of just a normal kind of blip in what's going on in the markets, or should we be concerned about some procurement and demand issues there?
Yes, I'm not terribly concerned quite yet. Yes, we took a step back, but frankly, we've been on a very nice run upward in those prices. So I think we're still okay. I begin to get a little more concerned about what's happening in terms of potential growth in pork supplies as we look ahead, especially into 2023, and whether that's starting to have any drag on the market. I don't think there's anything really on the demand side that jumps out to me quite at this point. Having said that, we'll probably have some terrible demand, but it seems like right now it's all stayed pretty strong to this point.
If that's the case, well, I'll just blame you. It's all right. Like, it's that Scott Brown.
If he hadn't said that, it would have all been much better, right?
All right, let's talk weekly slaughter numbers as we take a look at those for the week for cattle and hogs.
Yeah, USDA tells us for the week ending August 20th, a run of 661,000 head of cattle this week. That is 14,000 head above where we were a week ago, but down 5,000 head from same week a year ago. On the hog side, a pretty big run on the hog side, a run of 2.395 million head of hogs this week. That's up 70,000 head from a week ago, but still trails year ago levels by 37,000 head.
When we look at year to date, how are we running percentage wise on the cattle and hog side of things?
Yep. So year to date on cattle, we're up 1.1% in terms of cattle slaughter. But by the way, I'd remind us that part of that increase of late, at least, has to be drought related. And on the hog side, down 3.5% year to date.
I feel like that was a little foreshadowing as to what we're going to talk about in this cattle on feed report. Man, when you take a look at the July placements in this month's report, you kind of say, wow, again.
Yeah, for sure. So the pre-report July placements numbers were anywhere from down 4% up 1.3%. And yet the report today gave us placed in July 1.8% higher. And when you look at the on-feed numbers as of August 1st, the, again, pre-report range of exactly even to up 1.1%. When we got the report, we were up 1.4. So all those things, point to more cattle in the feed yard than we would have thought pre-report, more cattle placed in July than we would have thought. But again, I want to make sure we remind ourselves that when we're in a drought situation in many parts of the country like we are, we're probably pulling calves into the yard sooner than otherwise would be the case.
So while we see these numbers, these outside are at the upper end of pre-report expectations, we know that there are a lot of calves coming in. Not necessarily great news for probably near-term markets, but how does that set us up when we look big picture and longer term, late into 2022 and on into 2023 and beyond?
Yeah, so I think we can talk about getting awful bullish once we get beyond this drought pulled forward set of calves heading to the feed yard right now. Just to make sure we make the point well. So placements in July of less than 600 pounds, up 35,000 head, 6 to 699 weight categories, up 25,000. So those are the big increases. We were only up 32,000 head in total. And so those weight classes were the ones that were growing. The other heavier weight classes down. Just tells you we're pulling a lot of lightweight cattle into the yards. And again, I say drought induced. Again, I'll just remind us, we may be going with not as strong of cattle prices in the near term, but it probably only makes them stronger once we get further into 2023.
How do we look at inputs related to this? I mean, we think about higher prices in the long run, but also I would assume continued drought pressure on corn, on hay. And how does that play into this big picture when I think about risk management or the bottom line ultimately as we're looking down the road?
Yeah, so hay's the one for me that I think I start with. So corn's going to be interesting. USDA's August report would have suggested not as much of a drop in corn yields as I've heard from other places. I think that has a lot to do with some pretty good corn in some parts of the country and pretty poor corn in other parts of the country. But when you look at hay and just what's happening, especially in those significant cow-calf regions of the country, Texas, for example, USDA in their August crop production report would have suggested 2022 hay production down 3 million tons. That's a big cut. You take the states of Colorado, Nebraska, Texas, Oklahoma, Missouri, and Texas, hay supplies, hay production down 20%, as I recall, looking at just those 6 states. And those 6 states, I think, are about 40% of beef cow inventory. So I think there's one where I don't want to be waiting around forever to try to make sure I've got adequate hay supplies for whatever cows and whatever size of operation I want to try to move forward. So I think there's some risk management that could be at play there, even though we already have pretty high hay prices.
Do we get nervous too, thinking about hay prices, but also production and shortages, knowing that there are concerns about fertilizer still and how that kind of plays into that scenario long term as well?
Yes, and for a while I've probably been saying, well, there's an opportunity to move some cattle to the east, at least part of the United States. But when I look at states like even Kentucky, Megan, it seems like hay supplies aren't as large, or hay production is not estimated to be as large as it was a year ago, and so maybe there's more of an issue about availability than I realize. Now, I will say, as an economist, we'll always figure out how to ration whatever supply of hay we have. It's just how high prices go. And I think to remind everyone that even though we're at high prices today, it doesn't mean they can't go higher in the short run. We pretty much know what that production is going to look like. Now, yes, we've gotten some rain, and we should get some, hopefully, green growth in some parts of the country that's been lacking, but that'll be marginal fall grass relative to the traditional times that we would be talking about growing hay supplies.
You bring up Kentucky. There actually is a really great article recently coming out of the University of Kentucky talking about cost of hay production, and I will make sure we link that in our comments as well. And we're actually talking with Greg this coming week about that, because it's something that I think we have to think about in the long term, as we're and in the short term, obviously, as well. But when we're making business plans and we're trying to mitigate risk to be able to do the most that we can with these higher prices, and ultimately, take care of our bottom line and our operations, thinking in the long term and the big picture, right?
Yes, because all right, so but very, very well put. I think there's some long-term positives. And so how do you get from where we are today, where there's very few positives, just given how short we are on hay supplies, to the long term where cattle prices are more positive? That thinking through the longer term, I think, is a very good way to put it. There's interesting data that I still struggle feeling like I know exactly how this plays out. You and I have talked about this several times. I'll take Missouri again. So we were down 94,000 head January 1 of 2022 in terms of beef cow inventory. And I've said several times, Missouri didn't have a drought in 21. So we lost those 94,000 head for some other reason, generally. And I would say, lack of profitability had something to do with that. But let's go one step further. So suppose we have some of our smaller operations that the operator's been getting older on those operations. I don't think there's probably a lot of strategy out there to take 30, 40 cow operations and pass them on to the next generation. So does this period of very dry weather, very tough economic times, all of a sudden get folks to exit the industry and not return? I don't know if I like that scenario very well. I'm not sure that's exactly how it plays out, but something feels a little different in terms of where we sit today. And I kind of wonder what the cow herd looks like in terms of the kind of operations and the size of operations that return when we talk about 2024, 2025, and maybe some building of inventory.
And I think that also is a good reminder, not only risk management plans, but succession planning and figuring out never a comfortable conversation to have, but what happens next in your operations to make sure you have all of those pieces in place, because it's not fun doing it on the back end of it.
Exactly. It happens one way or the other. Prior planning can always make that usually a less painful situation, and putting it off is never a good strategy.
That's my soapbox for this Friday afternoon. And we'll end on that note. That's all we have for this week. Scott, as we look ahead to next week, what are some reports the reports we will be chatting about next Friday?
Yeah, big reports next week. So we get cold storage out of the gate next week, and we'll get livestock slaughter in the second half of next week.
Sounds great. We will talk to you then.
Sounds good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And if you want to check out what's going on the grain side of things, check out the weekly commodity market updates on Tuesday with University of Missouri's Ben Brown and Brownfield's Phil Robinson. Have a great weekend. I'm Megan Grebner for Brownfield.